Welcome, Law Nation. As always, I hope you're having a fantastic day and a fantastic week. Before we get started, if you're thinking about your future and how to go about creating more time and freedom, take action now and join Epic, our Esquire Passive Investor Club, by going to passiveincomeattorney.com and clicking join the club. Look, we all start this investing journey somewhere, and maybe I'll give you just enough motivation for you to take that next step and house hack into a duplex, or you'll buy a rental property, or you'll start an e-commerce store. Or if you've listened carefully and you don't have time for that, maybe you'll invest passively in an apartment building. How far can that get you? Well, far, really far. How about 7 million square feet of real estate in 25 different states? Or how about financial freedom so that you can practice or work part-time or not at all, to travel, to spend more time with the people you love, and to live a lifestyle by design? How awesome would that be? It's closer than you think. Our guest of honor, Daniel Farber, is the CEO of HLC Equity, a multi-generational real estate investment firm rooted in a family of attorneys that has owned and operated real estate in over 25 states throughout the USA, having owned and managed over 7 million gross square feet of commercial, residential, and development land. Can't wait for this. Let's go.
This is the Passive Income Attorney Podcast, where you'll discover the secrets and strategies of the ultra wealthy on how they build streams of passive income to give them the freedom we all want. Attorney Seth Bradley will help you end the cycle of trading your time for money so you can make money while you sleep. Start living the good life on your own terms. Now, here's your host, Seth Bradley.
Daniel, what's going on, man? Welcome to the show.
Hey there. Happy Thursday.
Happy Thursday.
Thanks for having me.
For sure, man. So let's just jump right in, brother. What's your story? Tell us a little bit about your background.
Sure. Well, have a pretty diverse background, everything running from experience in the military to working as a journalist to working as a strategic consultant in the technology space primarily. And, eventually it actually was never within my plans, but I eventually made my way into real estate and then eventually got into the family business, which is HLC Equity. And so that's kind of where we are today. Been working, full-time heavily in real estate for well over a decade.
Oh, that's awesome. That's awesome, man. So I know you have a few businesses, but let's start out with HLC Equity. Tell me a little bit about that current business.
Sure, with pleasure. So HLC Equity, we're a multi-generational real estate investment company. Traditionally, we did a lot of kind of retail shopping centers, what we call triple net lease assets, and that type of asset class. And then we eventually shifted into multifamily and to running multifamily assets. But as of today, we're an owner operator, been around for over 70 years, and wow. Just really have been fully entrenched in the real estate investment business for a long time.
That's really cool, man. 70 years is a long time to be in the real estate game. Maybe dive in a little bit deeper into maybe the origins of the company and kind of that deep family history, just because a lot of times,
sure.
We talk about real estate as being a creating multi-generational wealth. And it seems like you guys have been able to do that.
Sure. Yeah, well, with pleasure. So, interestingly enough, a lot of the core from the origins of the business actually came from the law practice. So one of the founders of the company, Herman Lipsitz, he was a child of the Depression, very hardworking individual who in the morning had a distribution business, in the afternoon had a law practice, and with the proceeds would buy real estate in the evening. That's kind of, going back to 40s, even before that to the 40s and so forth, 50s. And it really actually, some of the origins started in Arizona. So going out to places like the outskirts of Scottsdale, finding land and then using that legal savvy to rezone the land and then sell it off, and kind of like building from that, eventually went into more kind of solid assets like shopping centers and so forth. And, and really that was the beginning.
That's awesome. And I think a lot of our listeners can really relate to that, especially the
Yeah.
attorneys.
Yeah.
And we preach about that all the time. To start out, I think the best way to go about this is to use that active income, because a lot of these folks that are listening are highly paid professionals already. So they already have a really high income. So why not take that active income and use that to invest in real estate, either passively or maybe even actively if you have some extra time.
Sure.
And that's what your grandfather was able to do, right?
Right. Yeah, 100%. And I think that it's really important to differentiate between real estate as an investment and real estate as a business, right? So as an investment, like the passive income is huge and it's great. And back then, there weren't like all these platforms and all these syndications that existed, right? So then it was basically like, if you wanted to get in real estate, you more or less just had to go do it on your own, right? I mean, sometimes, and actually, that was the case historically with some of our family members, that they went into partnerships and then they were able to passively earn income as well, which was very great and beneficial. But there weren't nearly as many options as today. And so I think that definitely like a big part of that push was the idea that, yes, we wanted to earn passive income, but the time issue is a major thing, right? Because actively managing real estate is a full endeavor. So eventually, he got out of law completely, more or less. He got out of all of his other businesses because it became a full-time thing. But that's you're talking about a very unique individual that worked, 20-hour days easily.
Right.
Yeah.
Right. And that's the big thing. It's, ask yourself, how much time do you really have? I mean, if you have a full-time legal practice, especially at like a big firm or something where you're just billing tons of hours, I mean, you don't have time to really actively participate in real estate, at least not on any kind of scale.
Right. 100%. Yeah. Yeah. So, today when you have options of just simply passively investing with an active manager, it makes a lot more sense. And I'll even go further than that. And I'll tell you, even though I'm an active manager, I make passive investments with other managers, that may be doing something different in a different location or a different asset class or something else I believe in, because it's really a no-brainer. I mean, there's always risks associated with it. Just like any investment, but just going out and buying a fourplex, right? Just as an example, to do it well and to do it right is so complicated, and it's so it seems easy, but people that over the last few years may have done well doing it because the market has just gone up. But really, to have like a solid investment is really complicated, and you need proper management. And so to be able to just pass it on and say, hey, I just want to kind of sit back and watch it grow is very powerful. And the options are plentiful today.
Yeah, for sure. And I think a lot of it comes down to getting people comfortable with the idea of investing passively. They didn't even know you could do it. I mean, really until the Jobs Act, I think, what was that, 2012 or somewhere in there, when you were able to solicit and advertise for these sorts of things, it really kind of brought it to the mainstream, and more people kind of started having access to these investments. People are still just getting comfortable with that idea. I mean, back in your grandfather's day, or even 20 years ago, even 10 years ago, it was like you had to know somebody that knew somebody that syndicated, so you can participate in those deals passively. And there weren't that many people that knew about it. You had to, be part of the country club or whatever. You had to know somebody special and have that connection to be able to participate. But nowadays, like you said, they're all over the place. You've just got to, immerse yourself in it, get comfortable with the idea, and, you can get great returns and diversify out of the stock market.
Right. No, 100%. And I would just say, like, from my own personal standpoint, I do have some fear in terms of all of the advertisement, and there's definitely groups out there that advertise, returns that are not realistic. And I have a fear of people being lured by these high double-digit numbers. And I think that it's very important to say, like, the returns are what they are, right? The question needs to be, does this investment fit kind of like my risk profile in terms of, do I want income producing multifamily or retail or industrial, whatever it may be? And then the other questions that are just crucial to me are, who is the sponsor, and have they been around for, several years, preferably decades, to have weathered economic downturns? And then the other factors that play into it is the risk profile what I'm looking for, and then also do they have skin in the game, which to me is also always huge. And so with our investments, and our investors always appreciate, we're many times the significant investor in our deals, and we take a lion's share of the equity sometimes. So I think those are like the two really important factors.
Yeah, for sure. I mean, that's a great question to ask anytime before you invest into one of these deals. Do you have skin in the game? Are you investing yourself? How much is the general partnership investing? What percentage of the total raise is that? Just get a feel for if they're actually really committed to this deal themselves. They're putting their capital at risk as well.
Right. Yeah. 100%.
Yeah.
Yeah. And then the sponsor
right.
is key. Yeah.
Yeah, for sure. And it takes a little bit of due diligence up front. I mean, we call this passive investing, but really, it's not completely passive. At least at the beginning, you've got to do your due diligence on the sponsor, the market, the deal. Right. But then after that, then it really does turn into a truly passive investment.
Yeah, 100%. And I'll say that, I think with the groups that I invest in passively, I literally just look, is this group, do I like this group? Do I like what they're investing in? I don't ask any questions about the deal, because that's what I'm paying them for, right? And I know things can go wrong, and there's risks and everything, and that's why you don't put all your eggs in one basket. But those are the crucial questions, I think.
Yeah, that's an interesting take, man. Because you are right, though. I mean, you can manipulate the underwriting to make it spit out whatever return you want. So you've got to be careful as to not just look at, this deal and say, oh, this has got a better IRR, so let's go with this one. That's not what you need to look at. The sponsor, the track record, all that kind of stuff is way more important than that.
Yeah, 100%. Definitely.
So kind of going back to how you guys, moved out of the retail sector or not completely maybe, but started to move into multifamily. Why did you make that pivot?
Yeah, 100%. So, the net lease retail, both neighborhood shopping centers and the net lease asset classes have their own unique advantages and disadvantages. Some of the advantages are that, if you get a good tenant in that's a good credit, you have solid streams of income, right? And then the downside is that there's not as much upside in a lot of the scenarios, because you have a long-term lease that's locked in, and a lot of times you can't capture the upside for a long time. So coming out of like the last recession, 2008, 2009, we saw that there was going to be huge demand for multifamily. Multifamily was not nearly as hot and talked about back then. I mean, it's always been a great asset class, but it wasn't like you heard about it every second on social media.
Right.
And so we felt, but we also felt like kind of between the demand, inflation, financing, it just made a lot of sense. So we started doing smaller size deals in New York and Brooklyn and some other areas. And then we started looking at some other markets that, made sense to us. So Dallas was one that we kind of picked up in 2015, Denver. And that's where we kind of like started really growing our platform in terms of, doing larger scale deals and kind of like having more value add approach, where we're able to get current income and current cash flow, but we're able to also appreciate over the long term as well.
Gotcha. At what point did you start bringing in outside investors? Did you really keep everything kind of tight to the vest for decades before you started bringing in outside capital?
Yeah, 100%. So for decades, it was, either private dealings or else a couple partnerships with like some significant groups. And then really what as a growth strategy, those were our two ships: is let's get into multifamily, and also let's offer this, given we have track record, we have, the ability to co-invest, we have a great management team. Let's use that, and let's, partner with other investors. And then, obviously the Jobs Act played into that, in saying, look, we want to build our relationships with everybody from, high net worth accredited investors to private equity groups, institutions, and so forth. So really, we're blessed to have the full breadth of investors that come with us, everything from wealth management to private individuals. And so, it's really a growth strategy, but also a partnership, and we're able to do more, we're able to buy more buildings, and we're able to also allow other people to benefit, from our track record.
Right. Yeah, that's the thing. I mean, you guys have been doing it for 7 decades now, so you can bring in outside retail investors, even at like the retail level, and bring folks in that, they can participate with you, knowing that you've got the experience and the track record to be able to perform and meet those returns.
Right. 100%. Yeah.
So, you kind of alluded to a little bit how the multifamily market is starting to heat up. Well, it has been heating up for quite some
Yeah.
time. I mean, what's your overall multifamily market outlook?
Yeah, sure. So, they're definitely, I mean, I think that as an asset class, it's extremely strong. There's huge demand. There's been demand, forever. They can't build fast enough to meet the demand, right? So there's a lack of supply with huge demand. So the fundamentals in terms of, the demand and supply are very strong. Obviously there's, serious concerns around valuation, and just the competitiveness. And, we're seeing, just like lots of other people are doing really crazy things, putting out crazy numbers. And it's a function of, so much capital in the market, which exists in the stock market right now, and everything from the stock market to crypto to real estate. And so I think those are concerning, but as an asset class in multifamily, just in terms of the demand, I think that that's kind of why it's could be considered the safe harbor. I will say that I hate saying that because I'm always fearful when people say, well, it's the best asset class because somebody always needs a place to live. And as we've seen with, with the pandemic, I mean, nothing is a sure thing, right? You have absolutely no idea. Who could have imagined that we can't travel, freely right now? And so it's just like, I don't like having those assumptions, but in general, we feel very good about it. But the main challenge though, is definitely pricing and valuation.
Yeah, for sure. I mean, there's so much competition and, inflation of the numbers. I mean, looking at the same, like, let's say near downtown deals, multifamily, big
Right.
deals, over 100 units. And if you happen to see like the same projected returns that you were seeing 5 years ago, there's something wrong there. You need to dig into the underwriting, you need to dig into the sponsor, and you're just seeing a lot of these inflated projected returns, and you've just got to be really careful on, who you're getting into bed with there.
Yeah, 100%. I was speaking to one of our investors, and we were talking about time horizon for investment. And I said, I am a very short-term thinker. Our investment horizon is 30 years. Right. So I think that, in a day and age where you have, all these platforms pushing like 2-year returns of IRR, 20% and all of this stuff, I think what's really important for fundamental investors is to change the expectations in terms of returns, and B, the time horizon. And so, being a long-term firm, I think that the main thing is, that we can pay. I don't want to say we can pay some of the crazy valuations we've seen, but we can pay because we're paying, we're investing for 10 years, right? We're not investing for 2. So, and I think that that's an important differentiator, and also an important kind of outlook that we have to have, just given the current reality, because nobody knows what's going to be in 2 years or 10 years for that matter, right? So,
yeah. I mean, that's something I'm really curious about, especially lately, because I just started rethinking. We got in this real estate game for the long game, right? Like we want to hold it forever. That's usually our mindset going into it. But then we kind of get caught up in like, oh, well, you can get all your capital back in 2 or 3 years, and then we'll be exiting in 5. And they basically turn these deals into a quick flip, basically.
Right.
It's like you're dealing with an apartment complex instead of just a single family house. I think we, like you said, need to really examine how we look at these deals. And instead of looking at IRR, let's look at like total return. Let's look at cash on cash return and dividends and things like that. Rather than saying, okay, well, you can get your money back in 5 years or 3 years or 2 years, but then you've got to find another great deal to put it into. Why not keep it in a great deal for 10 years, 15 years, forever, as long as it's still spitting off cash flow?
Yeah, 100%. So I definitely think cash flow is the focus for us. The other thing is, I can say when we look back at our investments, without a doubt, when we invested, when it was a long-term play, it always panned out, 10 times better than if we would have done a short-term play, even if the investment actually ended up being shorter term than we expected, right? So a lot of times when we were buying for the long term, that was our intention. After even a year or two, the results became much better, but that's because we had a long-term outlook on the buy.
Right.
Yeah.
So I've heard you mention a few different markets. So where actually do you buy at? Is it national? Are you really looking for any great market, or where do you guys look?
Yeah. So on the retail side, we've been in 25 states, and we have a pretty national presence now. I think we're in 9. We've also sold off a whole portfolio of our real estate, of our retail. The markets that we're most active in right now is uncertain, definitely Dallas, Denver, and then we've been active in a couple other markets like Brooklyn and so forth. But really, we're looking into new markets now. So whereas 2015 we went into Dallas before it became as crazy as it is. Now we're looking in, and we're actually going in a contract on some transactions into newer markets that we feel are growth markets. Definitely, we believe in the story of migration from the coast, trying to find affordability, weather, and so forth into the southern states. So that's definitely something that we're focused on as well.
For sure, for sure. Are there any other asset classes you guys are bullish or bearish on, or considering entering into?
Yeah, I mean, there definitely are. I think there's, we have some partners that are very big in self-storage. I think that's a great asset class. And, it's one of the ones that you hear about a lot. And obviously industrial is also it's very hot, and we aren't involved in industrial. I think that there's a good case for it to be so attractive, but I also think that a lot of it is kind of pandemic related, and the surge in e-commerce. And so we'll see if that demand keeps up in the next 5 years. And then the other thing is just, when you get into the industrial, a lot of times you get into some of the issues we had with our retail, right? Which is that great, you get a great lease and everything, but you're not able to incrementally benefit from inflation, which is a likely scenario in the next several years. So I think that there are a lot of other interesting asset classes out there. It's just we focus kind of on certain areas to be really good at what we do.
Yeah, I love that. I mean, you can't be everywhere, but it's good to just keep an overall feel on the markets and the different types of asset classes that are out there, so that you can take advantage of those next opportunities. I mean, I think there's so much opportunity in hospitality right now, although it is starting to heat up again. But those assets are selling at 40 cents on the dollar right now due to the pandemic. But the thing is, you can't get them financed, right? So you've got to raise the equity to buy the whole thing cash, basically. But opportunities like that are incredible, and obviously senior living, that's another one that's going to be coming back, roaring back after the pandemic finally goes away. Like you said, self-storage is great. Mobile home parks, explore what you're interested in and get good at it.
Yeah, 100%. I mean, another big play that we're seeing come out, and it's just a matter of time, I think, until it becomes overvalued, but is hospitality to multifamily conversion. So we actually have been looking at several of those deals. I mean, the story makes sense, right? It makes perfect sense. But we actually just put out on our blog, on our HLC Insights blog, we just put out a post kind of like what you need to look for when doing a multifamily conversion, because it's more complicated than it seems. But it definitely has potential, and I know a lot of groups that are doing it right now. So
yeah. Now, I know we talked about like a lot of the good things that can happen, right? And a lot of the things you're bullish on. What are maybe some of the risks, or what are you leery of with respect to the real estate industry in the near future?
Sure. I mean, I think that it's as 2008 showed us, real estate, is still highly tied to the stock market, and there's just the overall economy. So I think that real estate, again, as an asset class, they're not able to, builders aren't able to build in order to keep up with the demand, especially in the multifamily space. But there is the overall economy, which is, just crazy, and has, all fun. It's unfortunate to say, but it seems like all fundamentals have been thrown out of the window. And we're seeing that roll into the real estate industry as well, right? Where people are paying just wild amounts and doing, just crazy things. And it never ends well when they do that, which is another reason why you can still benefit if you take a long-term approach, and, you just don't take on too much of a high risk profile with the deal.
Right. I want to switch gears just a little bit, because I want to talk about another one of your companies, Layers. And I think I'd like to just give you maybe just give us an overview of Layers.
Yeah, definitely. So as we started buying and managing our properties, our multifamily properties, we kept thinking, is there a better model that we can create? Real estate multifamily has been run the same exact way for so long. It is efficient, but maybe there's, in every efficient market, there's still some type of innovation and disruption that you can bring across. And so we started, playing with all kinds of different models, both from, how can we be more community oriented? Maybe we can offer additional services. And then we also kind of incorporated corporate housing and what we call service departments, which is essentially furnishing the apartments and offering services around it. So we built a consumer-centric brand, consumer-centric as into our residents, our tenants at the multifamily properties. And we now offer our Layers brand and operating model. So if someone comes to our Layers property, they can get a whole bunch of different services, and they can also get a furnished apartment. And so that furnished apartment side of our business has actually proven to be quite lucrative because we're able to gain significant premiums and also offer a better service offering all together.
That's cool. What are some of those services?
Well, there's our pre-pandemic services and our during the pandemic services, because pre-pandemic, it was everything from getting discounts and spa services and dog walking services and all kinds of services just that people need, laundry and so forth.
Yeah.
And now, with our service departments, we offer cleaning, we offer, other concierge services. Sometimes it's, by demand. But really there's also we've created a very kind of streamlined process to offer furnished apartments, and the demand for these apartments, because we've built this marketing system that kind of funnels it into our properties and our pipeline. So we've been able to implement that at our properties. And that has been really the primary service that people have needed. And there's all kinds of demands, everything from essential traveling workers that, don't want to stay in hotels, to corporate, to people who are buying homes or have some type of family, mix up. There's all kinds of different reasons people want these units.
Yeah, that's awesome. It sounds like it's just really overall, just the goal is to make your clients more comfortable, whatever those services might look like. And you've had to stay flexible during the pandemic to your offerings, right?
Yeah, 100%. Yeah. And then during the pandemic, it's been, because community is a big part of it, right? So people want to come, they want to feel part of a community, especially in this day and age, especially in a, era of isolation the last year. And so, we've quickly pivoted to, we had an app, we had a community app and everything that we connect everyone. And now we're able to just do a lot more digital kind of community activities and stuff in order to keep an engaged community.
Awesome. All right, Daniel, before we jump into the Freedom 4, one last golden nugget for our listeners.
I was thinking about this and everybody says it. And so, it's just so true. The people that you surround yourself with is just it's amazing how, what we're able to produce and the production that we're able to bring and how we're able to move, just because thankfully we have just an amazing team and just great people, has really been a game changer. And so I think everything from personal life to business, it really is just the people. So yeah. You might read that in every business book, but for what it's worth, I found it extremely true.
Yeah, it's so true. I mean, the people that you surround yourself with really make or break you. I mean, if you surround yourself with people that are successful, you're going to end up being successful. If you surround yourself with people that aren't, you probably won't be. I mean, it's crazy how that works out. And even though people hear it over and over and over again, they don't necessarily act on it, right? They might just, they stay comfortable where they're at. They don't surround themselves with successful people. And then they're upset because their lives don't change. So, they need to make it a point to really start surrounding themselves with the people that they want to become.
Right. And I'll go one bit beyond that. And I'll just tell you that generally when I'm hiring, especially if it's for a business development or general overall executive position, my main question that I'm asking myself is this person better than me? Because if they're better than me, then I want to get them immediately. Right. Yeah. And so that I think that it's an important thing, because you always want to make sure that the people you bring on your team are going to up your ante. Right. That's what it comes down to.
Yeah. And that's a really forward way of thinking, right? Because a lot of people would say, oh man, if I think they've got more potential than me, I'm not going to hire them because I don't want them to take my place.
Right. Yeah. 100%.
All right, man, let's jump into the Freedom 4.
It's time for the Freedom 4.
Yeah.
So what's the best thing you do to keep your mind and body healthy?
My main things is, first of all, as part of my Jewish tradition, I pray in the morning, and then exercising. I don't exercise as much as I'd like to, but whether it's hiking or, weights, I do it, at least 2 times, if not more, a week. And that definitely, with all the craziness, and especially in a day and age where we're on a screen way more than I'd like to admit, it's key to me.
Yeah, definitely. In an alternative universe where you weren't involved in your current businesses, what would you be doing?
So without a doubt, it would be like journalism and some type of diplomatic work, because that's the direction that for a long time I thought I was going, until I realized what politics was all about, and then I decided I liked the business world a little bit more.
Had enough of that,
Yeah,
right?
right.
Where were you at 5 years ago, and where do you see yourself 5 years from now?
So 5 years ago, from a company standpoint, we were, we were just kind of trying to figure out what our overall business plan was and our model. And so now I think that, we have a very good vision, and I see us expanding our investment portfolio and also expanding our layers kind of brand and footprint, both in terms of buying properties and running it through layers, and our layers light service, which offers a service to other landlords. So I expect those brands to be, in several states. I mean, at least 12 different states by then.
Very cool. How has passive income made your life better?
I mean, I just, it has definitely allowed me to focus on the two or three things that are very important, being, family, career, and, and also just living a healthy life while knowing that there's some sort of stability, which is huge. Yeah,
for sure. Passive income, that's where it's at, man. I think that's maybe why you gravitated back away from the journalism as well, right?
Yeah. Yes, that's for sure. That was a factor.
All right, man. Daniel, where can our listeners find out more about you?
Yeah, so in the show notes, we're going to put a link to HLC Insights, where we bring various insights on real estate and innovation, because innovation within real estate is something we're very big on. So being able to find out, more about investments and innovation. So we'll have that link, and also just to visit our site at hlcequity.com. We have our HLC Direct, which is where our investors can go and they can sign up as, accredited investors as well. That's it.
Awesome, man. Appreciate you coming on today.
Great. Thank you very much.
Thanks,
Appreciate
man.
it.
All right, Dan the man. You can easily tell he's a true expert in the industry. What an intriguing family story of creating multi-generational wealth. Also loved his analysis on the multifamily as well as other commercial real estate industries. Major key: one passive investment or one property can lead to the next, and then to 10, and then 20, and then even thousands. It can lead to the creation of a family office that turns into a national real estate development company to create a real legacy through multi-generational wealth. Plant seeds now and watch them grow. To learn more about passive investing in alternative assets, go to passiveincomeattorney.com and download the Freedom Blueprint. All right, catch y'all on the next one. Enjoy the journey.
Thank you for listening to the Passive Income Attorney Podcast with Seth Bradley. Do you want more ideas on how to generate multiple streams of passive income? Then jump over to passiveincomeattorney.com for show notes and resources. Then apply for the private Facebook community by searching for the Passive Income Attorney on Facebook. And we'll see you on the next episode.